Okay, so good afternoon and welcome to our audit presentation to community. Again, we did mention this last night at General Council. This is a follow-up in relation to our AGA that we held not too long ago. And so this is again just following up on that piece of our due diligence in providing a presentation to our community on our audit. We are joined with our guests, our auditors, Carlos and Matthew, who will be walking us through the presentation this afternoon. I believe we will be entertaining questions, Q&As at the end for a short period of time. And again, the audit is available online. I believe it's within the resources tab under the latest audits to scroll all the way down in the case that you would like to follow along with the presentation itself. Or as well, if there's any future questions that you would like answered and can submit to the office. So with that being said, I want to welcome both Carlos and Matthew to the chambers this afternoon, and I will pass the floor over to yourselves to walk us through your presentation. Onyawa.
Thank you, Chief Hill and members of council and members of the community. Great to be here to present what I would call the summarized results of the fiscal 2023 audit. As Chief Hill indicated, these are now online through the website. We have prepared what we would call a short 8-slide presentation that we will walk through with you today. Do keep in mind that the financial statements that are posted online are 33 pages. We will not speak to each individual page in turn, but we will give you a sense of the highlights that we feel is important to bring forward to your attention. So moving to the general concept slide, which is a few slides into the presentation. As a reminder for the community, these financial statements are for a 12-month period ended March 31st, 2023. The 33 pages of financial statements, in my opinion, do contain a lot of valuable and meaningful information, but we will focus in on 3 specific pages within those financial statements, that being the statement of financial position, the statement of revenue and expenses, and the statement of cash flows. Those 3 statements provide an accurate and overall indication of the performance of the nation. We as KPMG have opined on your financial statements. We have issued a unqualified audit opinion, which means that it is a clean audit opinion. And that financial statement date is dated at the end of September. So these financial statements are considered final at this point in time. We as KPMG are also independent. That is very important. What that means for the community is that we are not a member of the management team. We are here to audit your books and records. And so we are independent and therefore we can provide our separate audit opinion. One of the items that we would like to comment on is in the overall growth of Six Nations of the Grand River. We provided some information in our presentation on what I would call a look back. If you look back on the overall growth of the nation over the past 12 years, it is easy to see the significant growth that you have, both in terms of financial assets, total revenues, and the overall size. And that's important to note in terms of your journey, in terms of where you are today.
Thanks, Carlos. Looking at the box in the bottom right-hand corner of our slide here, I just want to speak to a couple of high-level concepts before we get into the numbers and some more targeted comments about the financial statements. Certainly, the financial statements serve many purposes, and one of those is to, as Carlos said, provide a snapshot of the financial assets and liabilities of Six Nations at a point in time. That point in time is March 31st, 2023, which is the fiscal year end of the organization. So what we'll have in the next few slides will show what is called the Statement of Financial Position, which will detail those assets and liabilities And some of the things that can be garnered in terms of information from that statement and the financial statements in general is, does an organization have sufficient assets to fulfill its obligations, continue day-to-day operations, and are those assets liquid enough that they can be accessed when needed? When a payment is due, does the organization have enough liquid cash to maintain the payables cycle and things like that? So we'll speak to some of those types of concepts when we get to the next page. But there are also non-financial assets that are going to be presented as part of the financial statements. And typically what we mean when we say that is tangible capital assets. So what that means is infrastructure, buildings, roads, machinery and equipment, things that Six Nations of the Grand River owns that have long lives and will be a benefit to the community for many years. For accounting purposes, those are capitalized as non-financial assets on the statement of financial position and amortized over time. For example, a building may have, for accounting purposes, a useful life of 25 years or more. So these are some of the concepts that will be illustrated in our presentation and in the financial statements. And then a little bit further on, as Carlos said, we'll also go through the statement of revenue and expenditures. More importantly, the annual surplus and annual revenues that are generated in order to reach the net ending position for the 1-year period ending on March 31st, 2023. These financial statements will also have a comparative column for the 1 year prior, so the fiscal year ended March 31st, 2022. And when it comes to the statement of revenues and expenses, the accounting standards also require that Six Nations of the Grand River's financial statements show the approved budgeted figures for the current fiscal year. So when we'll get to those slides, we'll mention some of these concepts again and draw attention to how the financial statements tell those stories. And of course, when it comes to annual funding, revenues, surpluses versus expenses, there are some important questions that can be answered by looking at the information in these financial statements. Is funding sufficient to meet the needs on an annual basis in terms of expenses? Are surpluses being maintained to fulfill needs in the future? So those are some of the things that we'll speak to. If we could go to the next slide, please. Okay, so what we see on screen here is the statement of financial position. So this is the first that I mentioned, which details assets and liabilities, again, for the year ended March 31st, 2023. Now, one thing I'll mention right off the beginning, the last bullet point in the box on the right, you will see that the 2022 comparative column is restated. Now, that is not because of an error, a misstatement, or an audit issue. That is because there was a mandatory change in accounting standards that Six Nations of the Grand River and all other organizations reporting under public sector accounting standards were required to adopt, which meant that the prior year had to be restated as if that standard had applied at the time. So just wanted to call that out. That is not indicative of any audit issues. It is something that all public sector reporting entities would be expected to have when adopting that new accounting standard this year. Now, with that out of the way, we will go through some of the assets and liabilities that you see here. Now, I think right off the bat, you can see the year-over-year change in certain metrics is quite apparent. For example, cash has increased by a significant amount year to year. You can see just under $89 million of cash as at the year ended 23 versus approximately 60 the year prior. You can also see that investments have increased significantly, now sitting at just under $88 million versus $68 million the year prior. So that is part of what Carlos alluded to. There is quite a bit of growth going on from year to year, and there are significant assets available as that growth continues. However, if we look at the liabilities section just below, we can also see a very significant change in the deferred revenue line item, which is now just under 110 million versus 60. Now, an important concept that can be illustrated on this page is the concept of deferred revenue. Some of that cash, including the amounts that came in resulting in that year-over-year increase, is received for funding agreements that may last multiple periods, multiple years. There may be conditions in those funding agreements that stipulate revenue may not be recognized until that cash is spent on an eligible expenditure. So that deferred revenue liability will be drawn down over time as the conditions of those funding agreements are met, as cash is spent on eligible expenditures. So it's important to note that, yes, it does look like there are a lot of assets available, but it is not always as simple as being able to spend all of those assets on demand. There are often many things that must be considered and conditions that must be met, decisions that council and chief must make before those funds can be spent, and that deferred revenue is taken into income. So a little bit of an accounting concept there, but certainly very important and something that certainly jumps off the page as a big change year over year. Now, I think another important concept to mention here, I touched on earlier, that is the tangible capital assets number. So that is towards the bottom of the page under non-financial assets. And again, that represents buildings, infrastructure, machinery and equipment, vehicles, any sort of long-lived asset that has been purchased in the life to date of the organization. Now, it is important to note that those tangible capital assets for accounting purposes are recorded at historical cost. They are not revalued each year. So for example, a building that was constructed 25 years ago would be included in that $139 million as a very small number relative to its market value today, as an example. So an important concept to note, even though that is a large number, it is not reflective of the true market value of those assets. Accounting purposes have that at historical cost. Now, I think the last one that we want to call out is the accumulated surplus line. That is at the bottom of the page here. Now, accumulated surplus represents the life-to-date results of Six Nations of the Grand River. So as you will see on the next page, the annual surplus or deficit for any given year may be anywhere from 5 to 15 million, depending on the year. But life to date, the accumulated results year by year by year build up to that number.
And maybe just to add a few comments, overall, it is important for the community to be aware of what I would call the financial health of the community. And so, you know, on this one page, I would say one of the key points is that the net financial assets increased. So again, that is a positive and healthy trend as it went from, 90 million to over 100 million. Again, a trend in the right direction. And also in terms of the overall accumulated surplus. Again, you can see a year over year increase from 2022 to 2023. Certainly we audit many what we would call public sector organizations. They do not always follow that same trend. But in this case, from my perspective as an auditor, that would be a positive item to point out. So we can move the slide to the next page, please.
Okay, thank you. So this slide here is the next page in the full financial statements for those that have downloaded that document online. This is the statement of operations, or what is also known as the statement of revenue and expenses, or the income statement under different accounting frameworks, all talking about the same thing. What you see on this page is the annual inflows and outflows of revenue, so money earned during the year, versus expenses, money spent during the year. Now, we'll walk through from top to bottom here, and we'll highlight a few different buckets. You can see that revenues are grouped into three buckets. The first at the top are user charges. So those are fees earned as members of the community or others pay for services, rent on facilities, for example, accommodation charges. So those numbers are recognized there. You can see about a 10% increase year over year and in excess of budget, which is a positive sign. However, it is very clear that that portion of revenue, $4 million, is not a significant portion of the total revenue Six Nations of the Grand River earns in any given year, which you can see was just over $145 million for the last fiscal year, an increase of almost $20 million over 2022. So again, you can see on this page that continued message of growth. More funding dollars are being made available to Six Nations of the Grand River. And you can see here the source of that funding and how that has changed year over year, which leads me to the second grouping. So you can see here government transfers, which include provincial funding agreements, federal funding agreements from Canada itself, comprise the majority of revenue earned in any given year. So you can see again an increase from about 109 to just under 119, so $10 million increase year over year, which is significant. And you can see the distribution of where that funding comes from, whether it be provincial, federal organization A or federal organization B, has changed year over year. That is not something within the control of Six Nations of the Grand River per se, but what it does mean is that the agreements that this funding is flowing through have been renewed and may look a little different than they did in the year before. So with this growth, it is important to note that there is a significant financial reporting and administrative responsibility and burden. So there is a lot of reporting outside of just the financial statement audit that must be submitted and often audited in response to conditions in some of those funding agreements. So as the community continues to grow, the additional reporting requirements and the amount of volume that management has to deal with and the number of decisions that chief and council have to make continue to increase as well. Now,
Maybe Matt, I'll just add one comment. Within the government transfers, you'll see that there was a decrease, a significant decrease in the revenues under the label other federal. But also, if you look at the next line, there's a significant increase in the revenues from ISC from 35 to 59. That is just a function of a shift in the organizations that have provided that revenue sort of between departments. So it is important to look at those two lines together as opposed to separately.
Yes, thank you very much, Carlos. That is important to note. All of this funding is often looked at by source, so federal and federal together would be the fairest way to compare that year over year. And if someone were to go to older financial statements as well, that should be kept in mind. I'll speak quickly on the other section of revenue there, the most significant of which is the annual funding earned through the Ontario First Nations Limited Partnership Agreement. That amount is earned by Six Nations of the Grand River on an annual basis, and you can see that has increased as well. But also that a significant amount of funding is earned each year via returns on the investment portfolio. So as we saw, that investment balance in terms of total assets has grown significantly year over year. So has the return on that portfolio. Of course, some of that is tied to market conditions, but it is important to note that money is being put to good use in terms of continuing to generate revenue for the future. Now, looking at the expenditures, I will point out that note 19 in the financial statement document that is available for download has more detail on these line items. This is a higher level summary of the expenditures incurred by Six Nations of the Grand River for the past fiscal year. You can see the budget versus actuals in the first two columns, as well as the prior year. And you can see that roughly half of the expenditures, both in the current and prior year, represent salaries and benefits paid to employees of Six Nations of the Grand River. And as we know, the current climate of the economy in general is putting a lot of pressure on all organizations. We know that there are upward pressures on wages, and it's becoming harder to attract and retain strong talent, not just in finance, but in all areas of the organization. So the numbers you see here certainly reflect that, and we will speak to that in a little bit more detail later.
And Matt, just to add, overall, what we are seeing in the public sector is that each and every year there continues to be an increase in the demand of services, an increasing demand in building infrastructure. One of the unfortunate results of COVID was that many organizations that were provided funding were not able to spend the monies fast enough to meet the demand for those services. And so that's one of the reasons why the deferred revenue balance would have increased so much on a year-over-year basis. It's not because there was a lack of need. It's because in a lot of cases, the money cannot be spent fast enough, given the supply chain constraints and other impacts of COVID. So that is important from a overall, what I would call macroeconomic perspective.
Thank you, Carlos. Just continuing down towards the bottom of the page here, you can see the concept of the annual surplus. So just a few lines up from the bottom, the annual surplus number, which is 14,100,000 or so for the fiscal year ended 2023, represents the excess of revenues over expenditures incurred for that fiscal period. So as you can see, that number is what trickles down to the bottom line, representing the growth of the organization, the surplus in a given year. Surpluses are healthy within reason. Certainly operating at a deficit and having a negative number instead of a surplus can be a concern, especially over multiple years. That is not the case in 2023 or 2022. So that is an indication of financial health. But also it means that there is an excess of revenue earned this year that is available to be spent in future periods. So some of that decision-making will extend into the future. Okay, thank you for turning the slides. So what we see on screen now is the third of the three core elements of the financial statements that we're going to go and speak to today. Again, these financial statements are 33 pages long. These are only 3 of them. However, they are 3 of the most important pages. What we see on screen here is what's known as the statement of cash flows. So this serves to present the information that we just saw on the other 2 statements in more detail. So this will tell the story of where cash was spent for the fiscal year, how you got from your cash account balance at the end of last year to your cash account balance at the end of this year on March 31st. So for this year, we know that that increase was $28 million. You can see that 14 million of that comes by virtue of that annual surplus that we discussed, but that there are also many ins and outs that offset during the year. So it's not as simple as 28 million more in cash is sitting there. There were many ins and outs that contribute to that change. So some numbers that you can note from this statement, $20 million purchased of investments. The previous year, there were $40 million purchased. Also, the amounts invested in capital assets. So just under $15 million of investment in building infrastructure and those tangible assets we talked about for 2023, and just under 10 million in the previous year. So I won't go into significant detail on this statement, as it does talk about some of the things we've already illustrated, just in a different way. But it is important to note that this tells the story of what was changing during the year.
Moving along to the next slide, just to give the community a sense of the sheer growth over a period of time. We selected 12 years as our look back, But if you were to select 8 years, 10 years, you would have the same conclusion. And that is the significant growth, both in terms of the total revenues of the organization, as well as the overall growth in the accumulated surplus. You're nearly at 100% over a 12-year period. And when you reflect on that growth, do keep in mind that that results in the organization needing to grow its team in terms of staff, also over that 12-year period to administer services, programs to the benefit of the community. One of the challenges that we've seen specifically during COVID is that many organizations have the full intention, to hire additional members, to grow the team, but unfortunately it has been somewhat challenging in terms of trying to attract the individuals with the right talent and the right qualifications to put into the right positions. So again, you have that growth, the demands continue to increase, probably more than that, but certainly the challenge is to grow the team and to find the right people. Okay? But certainly in terms of the trend line, you as an organization are growing at a very fast pace. So we can move to the next slide. Sure. And so with that, we will speak to the other findings as part of the audit process. Back in September, for the community's information, we would have presented, I believe it was a 40 or 50-page audit findings report that went into the very specific nuances as part of the audit. Certainly some of the highlights in that audit findings report would be our comments on where we believe you have improved as an organization. We have what we call a management letter, which we produce on an annual basis that includes performance improvement observations and control points. That would be one of the areas that we would say the organization has done a pretty good job in terms of improving and getting to where you need to be from an internal controls perspective. So that would be one comment. Another comment, again, on headcount. When Matt went through the income statement, you would have seen the increase in the payroll expenses on a year-over-year basis. Again, that's a function of the overall growth in the team of Six Nations. One of the other observations that we would like to share is, the majority of organizations are continuing their journey on becoming more digital. That means less reliance on paper, more reliance on automated controls. This is the future. This is the future, not only within accounting and finance, but also the future in terms of how services are delivered and how they're managed. So certainly that would be one key area to look forward in terms of helping the organization adopt a more digital friendly future, because there's a lot of benefits that can come from that. Certainly, again, back to improvements, one of the big improvements that we've seen that we can report to the community is on the use of budgets. If I go back several years, many of the budgets that were produced were a little bit later in terms of when they should have been prepared, but absolutely we saw more improvements. Again, budgets are very useful tools, not only to measure your current financial performance, but also to provide some direction in terms of meeting future priorities of wave investments. So we noted a significant improvement specifically in the last 18 months. And certainly from a internal controls perspective, whether it's the reconciling of cash and bank reconciliations, things of that sort, certainly we've also seen an improvement in those areas over the past several years. So from our perspective, you as an organization and as a community, you're moving in the right direction. Still work to be done, but definitely you're working in the right direction.
Thanks, Carlos. Now, we'll carry on, and I'll just mention that we're speaking aloud to our audit findings now, so there's nothing on the slide deck that we need to see at this point. Carlos talked a little bit about the observations KPMG has been able to make by performing our audit in the current and prior year, as well as years prior to that. So I think at this point, I'll go into a little more detail. What does an audit actually mean? What is KPMG doing in order to issue our opinion on the financial statements of Six Nations of the Grand River? Now, a financial statement audit involves us doing many things. Certainly, number one is making sure that the financial statements are prepared in accordance with public sector accounting standards, that they meet the mandatory criteria that the standards boards have issued. And the reason that that is important is to allow comparability between organizations reporting in the sector. So the financial statements of Six Nations of the Grand River would look conceptually similar to another community, another organization operating in a similar capacity. So that is certainly one of the big focus areas of the audit. There are many technical accounting standards that must be considered before each of the line items and each of those numbers on the financial statements that we spoke to earlier can be given the check mark, so to speak, from an auditor's perspective. Now, beyond just making sure that accounting concepts are being applied, we also need to audit the assertions that go behind each of those numbers. What I mean by that is we need to make sure that cash, for example, is complete, that it physically exists. We must obtain third-party evidence before we as auditors can opine on a financial statement. So in performing the audit, we will always go to third-party evidence where possible to support a transaction or a balance. An investment portfolio may be confirmed by communicating directly with the financial institutions holding those monies, for example. In other instances, when there's a balance payable, we will go to third-party evidence and view the contract or the invoice from that third party and make sure that management has accounted for those liabilities and transactions accurately. Now, there are also other things that go into the audit. Certainly before any auditor can do those procedures and obtain that substantive evidence, we have to understand how the processes work, how the organization's employees are actually booking these transactions, especially given the very high volume of transactions that flow through any given year. Now, that is one of the areas that has allowed us to garner some of these observations that Carlos spoke to. And because any auditor is looking at this each year in order to form a new opinion on financial statements, we can see some of those changes and improvements over time.
It's also important for the community to be aware that on the topic of fraud, we as auditors are absolutely mandated to report anything that we would consider suspicious or actual acts of fraud. And so as part of our audit findings to Chief and Council, I can confirm with the community that we did not encounter anything that we consider to be suspicious or actual. So all of the transactions that we would have audited were all above board, and there were no reportable findings on that important topic.
Thanks, Carlos. Certainly an important topic and something that any auditor must consider in any financial statement audited, performed under our professional standards in Canada. We do audit under Canadian auditing standards, and we have very strict mandates in terms of addressing the risk of fraud in any financial statement audit. Some of the things we look for involve using computer-assisted auditing techniques to look at 100% of entries booked to the accounting system during the year. We will look for outliers, unusual transactions that don't look the way one would expect, and also looking at postings of combinations that don't make sense. For example, a bill being paid with no cash being spent would be something that an auditor would investigate further once identified. Now, I think after summarizing some of the audit findings there, we do want to spend a little bit of time just speaking to the community as well as Chief and Council about some upcoming topics that will be relevant for the community and all public sector reporting organizations in the future.
So the first important topic is on ESG. Now, ESG, this is the environmental, social, and governance, that all public sector organizations are in various stages in terms of where they are in their journey. And the E, the S, and the G individually are not new concepts. What is new is how they come together and interact to sort of move mandates forward. And so one would think that Matt and I only deal with debits and credits, but one of the more significant areas that we are moving into is just to support organizations in terms of helping them focus in on what are the 5 areas that would be considered the most important under the ESG umbrella, because there are, over 100 things that would be important. Our recommendation is that you prioritize and start with the largest 5, and then you strategize in terms of how to move those forward with an ESG lens. So that is really critical, especially for the public sector. I can use a lot of buzzwords, but we do, services such as materiality assessments, helping you assess where you are today and help you with your strategy in terms of where you need to be 5 and 10 years down the road. So that is a very relevant topic. I just wanted to sort of plant that idea with you, just given the importance of what that means for all of us going forward. And the second item would be, again, on the digitization. Again, the majority of the public sector organizations are moving towards increased standardization, which allows you to do more with less. So instead of, having X amount of investments within finance and accounting or with processes, if you digitize some of the processes a little bit more, there may be savings that you can redirect from those processes to maybe something that would be more frontline associated with helping the community. So again, that would be the second very important topic that all public sector organizations are continuing to invest in their journey on those 2 topics. There are other topics, but we just wanted to end with those 2 as a leave behind. So that would conclude what we would call the very high summarized portion of the financial statements.
Okay. Well, now to both Matt and Carlos for walking us through that presentation. Again, for community's sake, you can find the full audit within our sixnations.ca website for those who are interested to get a more detailed look at the audit itself. I just wanted to start off with making a few comments, and then I'll open up the floor for any further questions or comments. I like to see, in a sense, of what you defined as growth, because I think it's important for council to recognize and realize as investment and to try to help offset, or rather look at the efficiencies within that growth. So for me, it's investing in areas that are going to upfront seem as an expense, a cost, but I think at the end of the day, it's the bigger picture of what that overall impact to that investment means to this community. For example, we've always been talking about justice here in this community and what that looks like. Having our own justice system, perhaps one day. Looking at establishing our own community standards so that, again, it's in line with what that justice system looks like. But that we know takes an investment to build. As you've mentioned, building the team and that capacity within. The biggest challenge, and I know you've already mentioned it, is finding those key people within the finance department itself and sector. As we all know, it's a shortage across the globe to find, good reliable people in that role. And so I think that's something that's always going to be a challenge here at Six Nations. But I must also commend our current finance team, Jennifer, Wayne, the entire finance team upstairs that works diligently for this community and to make sure that we are fiscally responsible. So I want to give a huge nyawa and thank you to each of you and your entire team. Because it does take a team to run this community, and it does take transparency. We always talk that word that has been thrown around, but it means a lot here in this community, and to hold high of accountability, especially when it comes to the financials. I think the other piece that I just wanted to touch on as well is when we're making these types of investments, and as you've seen into the community I'm speaking to, as you've seen the growth over the last 10 years, and I'm glad you've captured that image, because that image tells that story of where we're heading and where we're going. Because at the end of the day, it's about good governance, it's about being fiscally responsible, and it's about making sure community is involved and knows what's happening within this community. The other part that I think is something that we need to further discuss with the administration side is just the budgets itself. You know, a lot of the times, and it's always good to I think previously it's been mandated to, if there's dollars, apply. But I think we need to get more strategic in terms of what is it that we're actually wanting to get out of applying for those funds, as opposed to coming up to March and saying we got X amount of dollars that need to be spent before the 31st. So, you know, I think there's ways that we can really tighten up and improve, like you have mentioned, in terms of those budgeting exercises, and so that it better reflects the needs, the true needs within this community. I think that's something that also, I think internally, and I guess I'm not speaking directly to the auditors themselves, but in general, I think that's something that we as a community, politically, administratively, need to recognize and to look at where we're heading. And I think that's the important piece of not necessarily chasing every government dollar that's there, but what is it that we need in this community, and how are those dollars going to impact of those needs? And so I think that's something of a balance that we need to find a little bit better, as opposed to constantly looking for, I mean, it's always good, like I say, I don't want to misconstrue my statement, because it's always good to look for additional funds, but making sure that those funds are to the bigger picture of the plan itself, of the growth of this community, is another thing. And so that's something that I think is really important. But again, do want to say now to each of you as well, Matt and Carlos, for joining us this afternoon. And again, to our finance team, really commendable job, and to continue to keep up on those improvements. I think as we progress over the years, it's always nice to see improvements. So with that being said, thank you so much. With that being said, I'm going to open the floor for any further questions or comments. I'll start with Greg.
Yeah, thank you for your presentation. It was right to the point too, and not being too, I guess, sometimes you get into the numbers and you can get lost sometimes in the numbers. So that was really good to point out all the highlights, which is great. Thanks. Yeah, to the chief's point of growth, as we're growing in population, you know, it's reflected in our services as well, and you can see it, as you were saying. It seems to be a healthy growth ratio as we're going forward. One of the things is also too is as we look as from a governance level too, this actually helps us to look forward to not only just looking for funding, but also looking for our own source revenue as well, so that we can actually see and maybe see the progression of our own source revenue that will actually aid. Because sometimes, as the chief said, it's not only relying on this federal funding, which is often very capped, it's capped off. So we, as a growing community, you know, have to find other sources as well. So this is actually a good indicator of growth in basically what we need to go and where we need to go. So thank you.
Do appreciate your comments, Greg. Is there any further questions or comments? I see Audrey online.
Hello, gentlemen and council. My question is, we're hiring more and more staff. So where is that funding coming from? Is it the surplus? Or where is the best place for it to come from? So the programs don't.
For you, the chief and council, I would say it would be two parts. Many of the programs that are required to be administered do have conditions in terms of a percentage of the funding must be used for various purposes. So in some cases, you do need to have certain positions filled to help administer a program. That would be one avenue. And then the other avenue would be what I would call non-program related, where you simply need additional time and effort to be able to deliver expanded services to the community. And then in that case, that would generally come from general operations. So it's sort of those two separate concepts.
I guess just to clarify, the first one for the program, say the staff, but we're actually hiring more people. So I'm talking about a surplus of people or more programs, and if you're not given enough money by ISC or the province, then my question is, where does the funding come from then? Surplus or whereabouts?
By
This is
default,
staff.
if it's not covered in a specific program, then absolutely yes, it would come from what I would use the term general operations, which I think, to use your words, that would be annual surplus.
And I think that's, oh, sorry, really quickly, Audrey, I think that's where, to Greg's point, in terms of making sure community, not everybody's in finance, right? And not everybody understands numbers as well as others. And so I think it's nice to see the process of what it means as an operational budget to what it means now reading these audited financial statements, because those are two separate things. And I think that's something where we as a council have done that exercise. If there's reallocations that need to be made, then that's up to this council. So Audrey, I think to further answer your question as well, is not only do we obviously use the Ontario First Nations Limited Partnership dollars to offset a lot of the deficits within the departments, but the other piece is, to Greg's point, own source revenue. We need to look at where and how we can make our own money. That's the other missing link to this as we continue to grow and not be so reliant again. Because if you look at, I think, what is it, 52 to 57, it's almost 50% of provincial to federal, right? So as that continues to go or grow, we know we should be expecting more caps, to Greg's point. So even more of that driver to make sure that we're exploring every possible revenue generator opportunity there is. I hope that also answers your question, Audrey.
Yes, but my other part of that is, what about if this Bill 53 goes through with the Métis, and it looks like it's heading that way? So how do we protect our finances from being cut, split down, and shared with other groups who are not First Nations?
That's a good question. I don't think it's particularly to our auditors. However, I think it's something that obviously the leadership and advocacy efforts from this body that needs to assert as a collective, as you see already from the Chiefs of Ontario's position and our involvement as well on the Hill. I mean, it's going to be a battle to make sure that those funds do not interfere with our current funds. So I think that's something that's going to have to be a political priority of the 59th.
Okay, can we put that on our list then? And thank you very much for my answers.
Yeah, well, thank you so much, Audrey. Over to you, Greg.
Yeah, this isn't for the auditors, but I think the easy question, the simple question is just don't let them in.
Simplified is best, so thank you so much for that, Greg. Are there any further questions or comments for our auditors? Okay, I'm not seeing or hearing any at this point in time. So again, I want to say now and thank you to both of you for joining us. It's nice to see you not via Zoom and in person. I think we're getting out of post-COVID times here. So it's really nice to see you. And again, I must extend my gratitude and commend our finance team as well, Jennifer and Wayne and everybody upstairs, because I see everybody working diligently and I see the improvements happening, and it's again for the collective of this community. So with that being said, I'll look to a motion to adjourn. Is there a mover? Moved by Greg, seconded by Carrie. All in favor? Any opposed? Seeing or hearing none, motion is carried. Thank you, everybody. Nyawa. And this is officially now our last public meeting of the 58th. So thank you so much, Nyawa, and have a great afternoon. Take care.
Sure it is, Mark.